Hi everyone and welcome to the very first Forex Trading intro video. So from now on I'm going to be posting more free content about Forex trading, investing, business, mindset and all that other stuff. People who follow me on Instagram know this. I'm going to be posting more free content for people just to reach more people, educate more people. That's the goal for 2020 and beyond. So those of you who know me very well. Thank you for being here. And those of you who do not know me, my name's Alex. I'm from Serbia originally, and I got in all this e-commerce, making money online stuff some time ago. Make sure to follow me on my Instagram, which is Real Serbian Wolf at Real Serbian Wolf. You have my link tree there, so you can schedule a free call with me. Follow me on my um, Instagram. You can follow me in my Telegram group chat. You have a link there for that. And as well, you can subscribe to my YouTube channel where I will post these same videos just to reach more people and to educate more people on these kind of things. So today we're talking about Forex trading. So what does that even mean actually? So the word Forex is a derivative of foreign exchange. And that's basically, like it says here, global currency exchange market. All right. So global currency exchange market. And how does Forex even work? Well, it's pretty simple. Here you have an example. So if you live in Europe and you decide to travel to USA, you need to change your euros to US dollars, right? Obviously. And so you land in an airport in the US and you go to a exchange office and you exchange your euros for US dollars. And let's say for the for the sake, sorry, of the example that you get for 100 euros, you get 110 bucks back. So you get $110 and you're done with your vacation and two weeks later you get at the airport as well. And let's say that now today, like 2 weeks after that day, you get for 100 euros you get $120 back. So now you have like a $10 difference, and we're going to talk about that heavily in a couple of minutes. So basically to get an idea of what forex even is, uh, people think that forex is just like this some monstrous thing. No, if you ever exchange currency, you have participated in forex. If literally if any time in your life you exchange the currency, you participated in foreign exchange, and that's how simple it is. So basically, who trades, who even trades? So there are a couple of institutions here, right? We have the important ones, which are the banks, and believe it or not, you, the average Joe, me, you, your friends, your family, my friends and family, etc. So we are the biggest contributors in this like whole trading thing. So now, what are you even doing when trading? So we already said that trading is just exchanging currency and nothing more than that. It's as simple as possible. So if you remember the example with the euro and the USD, well, you should, because it's vital, and it's vital in order to explain how to make money here. And that's pretty simple. So you make money off of the differences in price. And that's it, folks. Believe it or not, you see in the example I said, well, one day you get for 100 euros you get $110 back, and then 2 weeks later, for example, you get 120 bucks back from the same 100 euros. So that's how you make money in forex, based on the differences in the prices, right? So I said that you exchange currency pairs. Now, what are currency pairs? Well, it's pretty simple. Currency pairs are the two currencies you are exchanging at the moment. That's it. So these are some of the examples of the currency pairs that traders often trade. So there's the famous Euro USD, Euro GBP. So GBP is the Great British Pound, Euro AUD. AUD stands for Australian Dollar. There's the famous UJ, USD JPY. JPY is the Japanese yen. That pair is also known as the UJ. You have the AUD NZD, that's a major pair. That's the Australian dollar versus the New Zealand dollar. And then you have the Euro CHF, which is the Euro franc, right? That's the Switzerland franc. So basically, when you talk about currency pairs, for example, Euro USD, you're placing an order, and we're going to talk about orders later. You're placing an order on the first of the two. So what does that mean? For example, if you take a look at the Euro USD, you are either buying or selling. Those are the orders. You can either buy or sell a pair. So in this case, Euro USD, Euro comes first. So you're either buying or selling Euro over the USD. And if you were to sell, for example, UJ, if you want to sell USD JPY, it means that you're basically selling USD over the JPY, which means that you, after some analysis, and I'm gonna make a special video about analysis, and that's gonna take like an hour or something. So in this case, if you want to sell the USD JPY, you're basically betting, quote unquote, that the USD is gonna go down, right? And if you're buying a currency pair, you're basically gambling, quote unquote, again, that the first pair, in this case, let's say Euro USD pair, if you're buying Euro USD, you're kind of betting that the euro is going to go up, right? That's that's pretty simple. So like I said, when trading, you can either buy or sell a currency pair, right? So when to buy and when to sell, like I said, folks, I'm gonna be making a special video, another video just on that. That's like the whole point of trading, and I'm gonna get to that in a couple of days. I'm gonna shoot a video. I'm gonna send the video first to my private group on Telegram where you can join, and then in a couple of days or a week later, I'm gonna post it on Instagram and YouTube as well, so everyone can see it. So the question I get a lot of people come to me and say, Alex, how much money do I need to start trading? Well, the funny thing about trading is that you can start with as low as $100. Literally, you can start as low as $100. Of course, the more the better. The more money you have to set aside to trade, the better, because you can use some of the benefits, etc. But of course, never risk too much. You see, trading is somewhat kind of a gambling. I'm not gonna say fully, because I can argue that to some extent, to a certain degree, but to a certain degree, it is kind of gambling. So you never wanna risk, like, because you can win trades obviously, but you can lose trades as well. So you never wanna risk more than you are willing to lose, so to speak. So when trading, you have something called lot size and leverage. We're going to talk about that in just a minute. So first of all is a leverage. Now, even if you start an account with $100, and here's a really practical and good math example of how leverage works. So for example, you see here, if your leverage is 100, and a leverage is something that a broker gives you, you have no authority of a leverage. Different brokers may issue different leverages, but in the big picture, leverage, let's say your leverage is 100 times, and you have $1,000 in your account. So on your account with that leverage, you're actually trading, believe it or not, like you have $100,000. Right? How cool is that? So basically your account value is your deposit times your leverage. So you never you never trade with just as much money as you deposited. No, based on your leverage, you can trade like your deposit times 50 times 100. So some of the famous, I'm gonna say, leverages are usually people use 50, 100, 200, 500. Some people even use 1,000. We're going to talk about that in another video, but just to get you an idea, leverage is very important. So the other thing is a lot size. Now, you never say I trade with $100. No, you trade in a lot sizes. And now the technical definition, so to speak, of a lot size is the number of currency units you're exchanging. But in like practical everyday talk, it's just, you never say I trade with $100. No, you say I traded the whole lot. I traded 0.01 lot. I traded 10 lots. It's just a number of currency units. It's just the amount of currency you actually traded. So that that all is fine, but Alex, How do you get money from this? Well, that's fairly simple to explain. So, like I said, with lot sizes, traders never say I made 50 bucks or I made 100 bucks on a trade. They never say that because with depending on some factors on the same trade with the same day, like on the same day, one trader could get like 5 bucks and the other one could get like 500 bucks. So you never say it. You never say I made $100 on that trade. You always say I caught quote unquote 50 or 100 or whatever pips. Now you might be asking, oh my God, what's a pip now? What is this guy even talking about? Let me just clear the picture for you, right? So pip in technical terms means point in percentage, and basically, in just like everyday talk, it's just a term traders use to express change in price. And that's all there is to it, folks. And we're going to have a practical math example of how pips work. Just a minute. So traders never say price drop for like 20 bucks. No, they say price drop, for example, 20 pips. So the pip is just an expression for price. All right, so in other words, just look at pips as the price. And it's going to be easier to wrap your hand around all these terms that you're getting now in a couple of minutes. So like I promised, the practical example of how and what are pips used for. So let's say that we buy GBP USD at 1.29900, right? So this is the price. And what does this even mean? So this means that we are putting in order to buy the GBP USD currency pair at the current price, which is 1.29900. So what does this even mean? This means that for one British pound, one GBP, you get $1.299, right? So we always take a look at the first one of the two when we take a look at the currency pair. And after a while, we decide to sell it, or as we traders say, we decide to close the trade. And the price when we closed the trade was 1.318. Okay, so now we have a difference. The difference at the price we sold at, which is 1.318, minus the price we bought at, which was 1.299, that gives us a result of 190 when you actually deduct the second from the first one. And we say, in this case, we caught, quote unquote, 190 pips, all right? And based on those things I talked about, which is lot sizes, on this particular trade, we could have made 19 bucks, 190, or $1,900, right? So from one single trade, how cool is that? That's that's like insane. And based on the lot size, which we're going to talk about later in a couple of days, I'm going to tell you all about it. It's pretty fun and it's pretty simple to understand. So we always look at the four decimals after the point. So in this case, we bought GBP USD at 1.299. So we're going to take a look at the four decimals, right? The fifth one in this case is called a pipette. But the first four ones are basically the decimals we want to look at when we count pips. Counting pips just means that math we did. So 1.318 minus 1.299 equals 190 pips. So that's called counting pips, right? And for every pair which does not have a Japanese yen in it, the rule stays the same. So we always look at the four decimals after the point. But if we have a Japanese pair, which means like USD JPY, Euro JPY, AUD JPY, it doesn't matter, whichever pair that has a JPY within himself, we take a look at two decimal points. So only two if it has JPY in it. Okay, and just the last screen here, some of the basic terms used in Forex trading and a little disclaimer, I'm going to be talking about and cover all of these in future videos or even a single video because a lot of these are just some intermediate uh, terms, let's say, some of these, right? So I'm going to cover them in probably the next video. So First of all, stop loss and take profit. Now you have some definitions here. I really have written them in like everyday English. So stop loss and take profit, those are basically the points when the prices actually when you automatically exit the trade. So in the last example, we said that we bought GBP USD at 1.29 and we exited at 1.31, right? So stop losses and take profits are just put in there in order for you not to look at the screen all day. So a lot of people think that when you trade, you need to be looking at the screens for like 10 hours a day, 12 hours a day. No, that's not true. And you're just gonna burn your eyes, nothing more. So when you make an analysis, and I'm gonna make a special video about analysis only, when you make an analysis, you decide to trade something or not to trade it. But if you do trade it, you automatically put your take profit and stop loss price points and you just leave it that. And at the end of the day or the next day, you can just look at your phone. I'm going to be showing you how to set up the app for your phone and your computer. So you just look at your phone and see what happened with that trade. I'm also gonna post some trading rules or like rules for successful traders, right? So once again, stop losses and take profits are just price levels where your trade is automatically gonna close, so you do not have to do it manually, and that's it. So number two, trends and trend lines. Now, price can either move up, it can move down, or it can move sideways. What does that mean? We're going to cover that in the analysis video. But just for you to get an idea on this, basically, trends, they are literally, price can either go up or down. Here it is, the plain, simple English definition. Trends, it can either be an uptrend or a downtrend, so the price can either go up or it can go down, and that's it. And the trend line is just the line that follows the trend, line up or line down, and that's all there is to it. Support and resistance, number three, that's extremely important. I'm going to make a whole separate video about support and resistance only. And well, in the plain definition, they are price levels on the chart. But there's a lot more to it, so that's why I'm going to make a special separate video about support and resistance only. Now, number four, trading windows. Now, trading windows, they have like two definitions to it. I've put here, when do you trade plus MT4 app window. So what does that mean? When do you trade? The Forex market works Monday through Friday, and depending on where you live on the planet, you can even catch a Sunday afternoon market. So basically, on a Monday, you are not supposed to be trading. Many traders advise us to not trade on a Monday because that's the start of the week, and you just have to see what's going to happen with the market when the week opens, when the markets open, and you trade very little on a Friday. So your main trading days are Tuesday, Wednesday, and Thursday. And the other thing, which is the MT4 app window. That's the app you're going to use on your phone. I'm going to make a video on how to use it very shortly so you can all see it. You can start your demo accounts, and after I make the analysis video, you can even start trading. And that's the whole point of this free content that I'm giving you guys. So number five, if my math is right, indicators. Indicators are, in plain English, tools that help you analyze the markets. We're going to go over that in the analysis video as well. Now, time frames, number six, I believe. Time frames are just the periods of time you look at on the charts. That's going to be really simple once we make a video on analysis as well. That's going to be a big video. It's going to last for like at least an hour. That's going to be a big video. I really advise you strongly to look at that video. It's going to be up in a couple days. And the last but not least, bull or bear market. So this is the same as the trend. Now, the bull trend, the first trend, is a uptrend. So the bull trend is an uptrend and the bear trend is a downtrend. So if the price is going up, if the price is increasing, we say that this is a bull market or a bull trend. And on the other hand, if the price is decreasing, we say that the market is bearish, and the trend is a downtrend. So it's basically a bull or a bear trend most of the time. Well, there it is, folks. That's some of the basic terminology used in Forex. Like I said many times by now, I strongly suggest that you write some of these down. You'll have a recording so you can pause it and stop it and replay it 100 times if you need to. These are just some plain and simple. This is a plain simple business model. Let's say some plain simple basic terms to get your head around Forex, and just to make sure you have some idea and some thought about it. So I'm gonna be pulling off some other videos. I'm gonna be pulling off and posting more and more content every single day for you guys to look at. Sorry, this is like my 10th meeting of the day, so I don't even know like what am I saying anymore. But anyways, thank you so much for being here. Thank you so much for listening me out, hearing me out, and yeah, I'm gonna be posting some future videos very soon. Thank you all for being here. Stay amazing and make your dreams possible. AJ.